If you think the Federal Reserve is untouchable, that the chair can say whatever he wants and nothing happens, then what I'm about to tell you is going to flip that belief on its head. Because a criminal investigation has been opened into the sitting Fed chair, Jerome Powell, and whether his testimony to lawmakers last June crossed the line into false statements territory. Now here's the twist. The official reason is a building renovation budget, a renovation, a spreadsheet, a line item. And yet the Department of Justice is treating it like a potential perjury case. So in this video, I'm going to walk you through what's most likely to happen to Powell, why the building story is almost certainly a cover, and, this is the part you really care about, why this is the kind of power struggle that can light a fire under gold and silver. But first, quick and important. I'm running a campaign to eliminate copycat channels, and my stats show a big chunk of you watch regularly, but still haven't subscribed. If you value this content, hit subscribe and comment Our John AG, so I know you've got my back. All right, let's get into it. Before we go 1 inch deeper, understand something. Headlines like this are designed to do two things at once. They scare you because criminal investigation sounds like chaos. They distract you because while everyone argues about whether Powell lied, almost nobody talks about the real issue. The government is addicted to cheap money, and the withdrawal symptoms are showing. And the reason I'm being so direct is because you and I don't get the luxury of pretending. We're the ones living with the consequences. Now you might be thinking, okay, John, but what exactly did he say, and what exactly changed? You don't need the verbatim transcript to see the pattern. He referenced an earlier estimate. Later, the estimate was revised higher. That's the entire hook they're using. And if you've ever worked in any large organization, you know what happens next. Committees revise scopes, contractors revise bids, timelines slip, and suddenly the final number is not the number anyone originally quoted. That's why I keep coming back to one idea. If this were purely about a budget revision, it would be a political scolding, not a criminal probe. So why go nuclear? Because nuclear gets attention. Nuclear creates leverage. Nuclear makes the next person think twice before they say, no, we're not cutting yet. And that leads to the first cliffhanger of this video. If they're willing to use the DOJ as a pressure tool here, what else are they willing to use when the refinancing wall gets closer? Now let's talk about the refinancing wall in plain language. Imagine you have a credit card balance so large you can't pay it off. So you keep moving the balance to new cards. As long as the new card offers a low teaser rate, you can survive. But the moment the teaser rate ends, your minimum payment jumps and the whole trick stops working. That's the United States right now. For years, the teaser rate was near zero. Now, the teaser rate is gone, and the government's minimum payment is exploding. That is why the pressure to cut rates is not a preference, it's a necessity. And that's why the battle over the Fed chair is not just a personality conflict, it's a survival conflict. Now here's where people get confused. They say, but 4% doesn't sound that high. Sure, if you're refinancing a normal mortgage, but when you're refinancing trillions, every single percentage point is a tsunami. And when 1/4 of the debt rolls within a year, you don't get to wait it out. You either pay the new rate or you change the rate. And governments always try to change the rate. Now let's connect this directly to gold and silver without the fluff. Gold and silver are not get rich quick. They're don't get poor slow. They're the antithesis of a system that solves problems with printing. So when you see political pressure on the Fed, it's not just drama. It's a clue that the printing solution is getting closer. Because if they can't refinance comfortably, they will choose one of two paths. They'll cut, or they'll tolerate inflation. And in reality, they often do both. Now here's the part that the mainstream conversation rarely touches. Even if they cut rates, that doesn't automatically mean inflation disappears. Inflation is not a light switch. It's a process. And once the public learns that cutting is the answer to debt pain, the psychology changes. People and businesses start acting differently. They borrow more. They price higher. They demand higher wages. They lock in costs. They assume the currency will buy less next year. That's how inflation becomes sticky. And sticky inflation plus rate cuts equals negative real rates. Negative real rates plus negative real rates equals, you guessed it, an environment where metals can outperform. Now I want to add a second cliffhanger right here. If they cut to make debt cheaper and inflation doesn't fall fast enough, what happens next? Do they raise rates again and admit the cut was a mistake? Or do they double down and accept a weaker dollar as the price of keeping the government financed? That decision is where the next leg in metals can be born. Now let's talk about the independence myth because it matters for your strategy. Independence has always been a spectrum. Sometimes the Fed leans against politics. Sometimes it leans with politics. But what markets care about is whether the Fed can credibly say no. And an investigation like this is a public way of making no more expensive. That's why, even if Powell never faces charges, the signal is still loud. Now, I can already hear the counterargument. This is all theater. They do this, then they move on. Why should metals care? Because theater changes expectations, and expectations change behavior. If businesses and investors expect easier policy, they position for it. They front-run it. They buy hard assets before the policy is official. That's why you see gold sometimes move before the cut happens, not after. Now, let's get practical again. If you're building a precious metals position, you need two things: a plan for accumulation and a plan for emotion. That's why I'm always telling you to focus on the fundamentals, not the noise. Now, here's a concept that will keep you sane. Metals are not a bet on one headline. They're a bet on a system, and the system is built on debt expansion. So when you see the system straining, you don't need perfection. You need exposure. Now, I want to go one layer deeper into the why May matters piece. Powell's term ending in May creates a natural political window. If you want a policy pivot, you prefer to make it with a new face, because the new face can say, "We reviewed the situation." They can blame the previous chair. They can claim they're recalibrating. They can sell a rate cut as a fresh start. That's why chair transitions are powerful. And that's why this investigation appearing ahead of May feels less like coincidence and more like pressure positioning. Here's the simple sequence to watch. Headlines escalate, politicians posture, and behind the scenes the market starts pricing the next chair's bias, often before any official announcement. That's why expectations can move gold and silver earlier than most people think. Now let's talk about the different personalities gold and silver have, because this is where many people get trapped. Gold is the reserve metal. It's the one central banks hold. It's the one that tends to move first when confidence shifts. Silver is the wild card metal. It can lag, then suddenly explode when momentum hits. Silver also tends to punish impatient people because it looks dead until it isn't. So if you're watching this and you're thinking, should I lean gold or lean silver? My answer is, understand your temperament. If you want smoother, you lean gold. If you can handle chaos for the possibility of outsized upside, you consider silver. But don't confuse volatility with weakness. Volatility is often the price of bigger moves. Now, I'm not telling you what to buy. I'm telling you how to think. Because thinking is what protects you from being manipulated by headlines. Now let's add one more piece that makes this story even more important. A politically pressured Fed doesn't just affect rates, it affects credibility. And credibility affects global demand for the currency. You don't need the dollar to lose its status tomorrow. You just need marginal buyers to demand a higher yield for the same risk. And if buyers demand higher yields, debt service gets even worse. Which means the government is trapped in a feedback loop. Higher yields raise interest costs. Higher interest costs increase pressure to cut. Cutting can weaken the currency. A weaker currency can raise inflation. Inflation keeps real rates negative. Negative real rates support metals. That loop is why precious metals are not about one scandal. They're about structural pressure. One warning: don't get hypnotized by the personalities. The real driver is incentives. Debt rewards cheap money, and cheap money punishes savers. So the real question isn't who wins the argument. It's what policy the next chair feels forced to deliver. One symbolic cut or a full easing cycle. Now, let's bring this back to you. If you've been waiting on the sidelines because you think you'll time the bottom, understand this: the bottom rarely announces itself. What announces itself is the shift in policy and the shift in narrative. And by the time the narrative shifts publicly, markets often have already moved. That's why, in my view, the only real edge regular people have is consistency. You build positions when nobody cares, so that when everybody cares, you're not forced to chase. All right, back to the macro. There's also a psychological component to the investigation that matters. When the public sees Fed chair under investigation, it introduces doubt. Even people who don't understand monetary policy understand one thing: if the person steering the ship is under attack, the ship might not be stable. And in a world where stability is already questioned, that doubt can push people towards safer stores of value. Now, here's the part that will feel counterintuitive. Sometimes gold and silver react not when the bad thing happens, but when the market realizes the bad thing is being managed poorly. Bad news handled well can be neutral. Bad news handled with panic can be bullish for metals. So watch the response. Watch whether officials try to calm markets or weaponize the story. Now, because I promised what likely happens, here's the realistic endgame. The investigation gets used as leverage. Powell's term ends. A new chair is installed. The new chair emphasizes balance and flexibility. Rates start to come down, slowly at first. Then the economy wobbles or the debt rollover hits harder. Then cuts accelerate. And then, when real rates are clearly negative, metals begin attracting capital beyond the core stackers. That's when you see mainstream attention. That's when you see gold new highs segments. That's when silver goes from ignored to everywhere. But the people who win in that phase are usually the ones who were positioned before the TV anchors got excited. Now, last thing before we wrap, don't forget the description. Bonus links are there, including the premium WhatsApp channel and the option to join channel membership. And if you want the most researched breakdowns, the members-only videos are where a separate team works deeper, with more digging and more detail than a standard episode. All right, keep your eyes on May, keep your eyes on real rates, and keep your eyes on the difference between the official story and the real motive behind it. On paper, the accusation is simple. Powell testified about the cost and scope of a Federal Reserve renovation project. In that testimony, he referenced an earlier estimate around $1.9 billion. Then, later documents surfaced with an updated estimate closer to $2.5 billion. That's roughly a $600 million jump. Not 600,000. Not, oops, we forgot the paint. 600 million. And look, I'm not here to clap for a central banker. I'm not here to defend fiat money managers. But if we're being honest, using a renovation overrun as the trigger for a criminal probe is convenient. Almost too convenient. Because here's what matters. These kinds of investigations don't begin and end with drywall. They begin and end with power. And right now, power over interest rates is the most valuable weapon in Washington. Think about the incentives. If you were a politician staring at a mountain of debt, you wouldn't want a stubborn Fed chair holding rates higher for longer. You'd want a chair who blinks, who folds, who cuts. So when an investigation suddenly appears, and it happens to land on the desk of the one person refusing to cave, you don't have to be a conspiracy theorist to see what's going on. The building story is the excuse. The rate story is the motive. And Powell knows it. He has already signaled in plain English that he views this as pressure. Pressure to steer monetary policy by intimidation instead of data. That's not me guessing. That's the message he's sending. This isn't about the renovation. It's about forcing my hand. Now, whether you like Powell or you can't stand him, you should pay attention to the implication. The Federal Reserve is being pulled deeper into politics. And when central banking becomes openly political, confidence becomes fragile. And when confidence becomes fragile, people start looking for something outside the system. That's where gold and silver come in. But before we jump to metals, you have to understand the math that's driving this entire drama. Because the US government is on a refinancing treadmill. In the next 12 months, roughly a quarter of federal debt is scheduled to mature and get rolled over. That means old bonds, issued when rates were near zero, are expiring. And the government has to replace them with new bonds at today's rates. That sounds boring until you realize what it does to the budget. For years, the system survived because interest costs were artificially low. The government could borrow trillions and still keep interest payments from exploding. But now rates are hovering around the 4% range, and suddenly the bill comes due. The interest line item is already massive, one of the largest expenses in the entire federal budget. And if the government is forced to refinance a huge chunk of debt at these levels, the interest cost doesn't just rise. It compounds, it eats, it crowds out everything else. And here's the uncomfortable truth. A government that spends more and more on interest has less room to spend on anything that buys votes. Less room for programs, less room for stimulus, less room for promises. So what's the easiest political solution? Not austerity, not cutting spending, not admitting the party is over. The easiest solution is to pressure the Fed to cut rates so the refinancing pain is lower. That's why this investigation matters, because it tells you the pressure campaign is escalating. And that is exactly the kind of environment where precious metals usually thrive. Let's break down why. If rates stay where they are, the fiscal picture continues to deteriorate. Deficits stay ugly. Debt servicing stays heavy. The public starts noticing the gap between what the government promises and what it can actually afford. That alone is supportive for gold and silver. But if rates get cut, something even more powerful happens. Real interest rates go further negative. Real rates are simply the interest rate minus inflation. When real rates are positive, cash and bonds can compete. When real rates are negative, saving in fiat becomes a guaranteed slow bleed. And historically, negative real rates are the kind of conditions where gold and silver don't just do okay, they tend to run. Because people stop thinking, how much interest do I earn? and start thinking, how much purchasing power do I lose? That shift is everything. And it's not just retail investors. It's institutions. It's foreign holders. It's anyone who can do basic math. Now here's where the story gets more interesting, because the market is watching two clocks at the same time. Clock number one is the investigation timeline. A serious DOJ investigation isn't a 2-week headline. It drags. It takes months, often a year or more before anything meaningful happens. Clock number two is Powell's term. Powell's current term as Fed chair is set to end in May. So ask yourself, what's the most likely outcome? Is the government going to push this all the way to dramatic criminal charges against a sitting Fed chair? Or is the more likely outcome that Powell finishes his term, a new chair gets appointed, and the investigation quietly loses oxygen? If you've watched politics for more than 5 minutes, you already know the answer. The point isn't necessarily to convict him. The point is to weaken him. To signal to the next person, you are not above the people who can open investigations. That's how pressure works. And if that is the new standard, then the Fed's independence becomes a marketing slogan, not a reality. Now I want you to pause here, because this is one of those moments that looks small in the news cycle, but can be huge in the macro story. If the market starts to believe the Fed will be politically directed, then rate policy becomes less about inflation and more about financing government debt. And that is not a recipe for a strong currency. It's a recipe for a currency that gets sacrificed to keep the system moving. Which brings us back to gold and silver. When investors realize the central bank's first job is to keep the government solvent, the inflation fight becomes optional. And if inflation becomes optional, the monetary metal story becomes mandatory. Now, does that mean gold and silver go straight up in a line? No, they never do. There will be pullbacks. There will be fake-outs. There will be "it's over" headlines from the same people who have been wrong for decades. But the direction of the pressure matters more than the daily candles. And the pressure is toward easier policy. Now, I can already hear some people saying, okay, but if rate cuts are coming, when? And I'll give you the honest answer. You don't get explosive cuts overnight unless something breaks. But if the political machine is trying to influence policy, it tends to accelerate as deadlines approach. Remember, the refinancing wall doesn't wait. So a realistic window for bigger policy shifts is not tomorrow. It's more like spring into summer, after the chair transition, when the next person walks in and needs to prove they're practical. And practical in this environment usually means cheaper money. That's the cliffhanger, because the question becomes, who replaces Powell and what do they do on day one? Do they walk in and keep rates high, knowing the debt cost is exploding? Or do they come in with a fresh narrative, some new excuse, to justify cutting? And if they cut, do they cut once, or do they open the door to a cycle? That's what the gold and silver market will be sniffing out. And by the way, if you're serious about following this kind of story without missing the key details, check the description after this video. I've put bonus links there for you, including a premium WhatsApp channel link and a channel membership link. And yes, we also offer members-only videos where a separate team goes deeper, does extra research, and breaks down the kind of details that don't fit inside a regular upload. Those videos are only for premium members. Now let's zoom out even further, because there's a deeper lesson here that governments still refuse to learn. If the core problem is too much debt, created by years of artificially cheap money, then the solution cannot be more cheap money that creates more debt. That's not a solution. That's delaying the bill. It's like trying to cure a hangover by drinking again. It might numb the pain for a moment, but you know exactly where it ends. And this is why precious metals keep coming back into the conversation, because gold and silver don't require you to trust anyone. They don't require a promise. They don't require a committee meeting. They just sit there as a form of money that can't be printed, can't be revised, and can't be rescued by a press conference. Now, I want to make this practical. What does all of this mean for a gold and silver investor? It means you should think in scenarios, not certainties. Scenario 1, rates stay high. If rates stay high, the government's interest burden grows, deficits stay hot, and political pressure rises. That environment is not friendly to long-term confidence in the currency. Gold and silver tend to benefit from that slow erosion. Scenario 2, rates get cut. If rates get cut, real rates likely become more negative, and the opportunity cost of holding metals drops. That environment is typically the one where metals can move fast, because it flips the psychology from "I'll wait" to "I need to protect myself." Scenario 3, the ugly one. Something breaks, credit markets seize, a major institution stumbles, or the economy rolls harder than expected. In that case, policy can swing rapidly, and the market can reprice risk in a way that makes yesterday's reasonable gold price look cheap. So no, you don't need a perfect forecast. You need a framework. And the framework right now is political pressure on the Fed is increasing, the debt refinancing problem is getting worse, and policy is being pushed toward ease. That's supportive for metals. Now let me bring up another angle that people miss. When the government struggles to refinance, it doesn't just cut rates. It also leans on narrative. It leans on communication. It leans on anything that can keep investors calm enough to keep buying bonds. That's why you'll see headlines telling you inflation is beaten, telling you everything is fine, telling you this is a soft landing, even as the math says otherwise. And when the narrative diverges from reality, that gap is where hard assets shine. Because hard assets don't care what the headline says. Now, quick sidebar. This is creative, but it matters. If you're also interested in silver-related success stories, check the description for a link to another channel focused on how real people turned silver into real wins. Give it a quick subscribe and see how others played the long game. Back to the main story. The investigation itself, again, is being framed around testimony and the renovation budget. The accusation is that Powell may have been false or misleading about the cost. But here's the thing about renovations. Costs change. Estimates evolve. Numbers get revised. If we criminalize every cost overrun, half of the people who build bridges would be in handcuffs. Which is why I keep saying, the renovation is the wrapper, not the candy. Now, here's what's most likely to happen next, step by step. First, the story will cycle through the media with dramatic language, because that's how attention is sold. Then, there will be political sound bites. Some people will demand accountability. Others will call it intimidation. Then, lawyers and committees will do what they always do, slow walk everything. And in the background, the real negotiation will happen where it always happens, behind closed doors. The negotiation is not about tile and steel, it's about rates. It's about whether the Fed chair is willing to help the government finance itself. And the closer we get to May, the louder the pressure gets. Because when a chair is weeks away from being replaced, the incentive to make him a cautionary tale increases. Now, here's the big question. Even if this investigation fades, what does it reveal? It reveals desperation. A government that is comfortable doesn't need to pressure its central bank. A government with manageable debt doesn't need lower rates as life support. A government with fiscal discipline doesn't need to play games with intimidation. So if you take nothing else from this video, take this. The investigation is a symptom. The disease is the debt. And the treatment they want is the same medicine that caused the disease in the first place. Now, how do gold and silver respond to debt disease? Historically, they respond by becoming the alternative, the safety valve, the "I don't trust this" asset. And when trust breaks, price can move faster than people expect. But you have to be positioned before the crowd panics. Because when the crowd panics, premiums rise, supply tightens, and the easy opportunities disappear. Now, let's talk about the emotional trap in this market. When gold and silver go quiet, people get bored. They chase trends. They chase hype. They chase the next thing. Then something like this happens, an open power conflict around interest rates, and suddenly everyone remembers why metals exist. But by then, the market has already adjusted. So the smart move is staying consistent, not emotional. And if you've had any success doing that, if you've built a stack, protected your savings, or made smart moves in chaotic times, share your success in the comments. Seriously, 1 or 2 lines. Your story might be the push someone else needs to stop procrastinating. Now, let's address one more misconception. Some people hear rate cuts and think that automatically means stocks go up, everything is fine, and metals are unnecessary. That's a surface-level interpretation. Rate cuts can be bullish for risk assets in the short run, yes. But when cuts come because debt service is choking the budget, that's not growth cuts. That's survival cuts. And survival cuts are not a vote of confidence. They're a signal that the system needs cheaper money to keep breathing. And that's exactly why metals can benefit alongside other assets. Now, I want you to imagine a moment in the near future. A new Fed chair is in place. The language shifts. Instead of inflation is our priority, you start hearing, we must balance our objectives. Instead of higher for longer, you start hearing, we are data dependent and flexible. And then, almost casually, the first cut comes. Markets cheer. Headlines celebrate. But under the hood, the real story is that the government just got a little relief on refinancing. Then another cut. Then another. And before you know it, real rates are deeper in the red. That is when gold and silver tend to stop crawling and start sprinting. That's the setup. Now, does this guarantee a straight shot higher? No, but it changes the probability. It shifts the odds. And investing is a game of odds. Now, if you're wondering why I'm putting so much emphasis on real rates, it's because that's the hidden tax. You don't need the dollar to collapse overnight to lose. You just need it to quietly lose purchasing power year after year while your savings earns less than inflation. That's the stealth theft. And gold and silver are, historically, a defense against stealth theft. Now, I promised you I'd explain what's likely to happen to Powell. Here's my view, and remember, this is about incentives. The cleanest political outcome is that Powell finishes his term, the new chair arrives, and the investigation slowly gets buried under the next scandal. Maybe there are hearings. Maybe there are angry speeches. Maybe there's a review. But an actual courtroom showdown is unlikely, because that turns the Fed into a public battlefield in a way that could spook markets. And governments don't like spooking markets when they need markets to finance them. So the probable outcome is pressure applied, message delivered, and the system moves on. But even if that's the outcome, the damage is done, because the precedent is set, and markets care about precedent. All right, final stretch. What should you watch next? Watch how politicians talk about rates, not how they talk about inflation. Watch the language around growth, jobs, stability, and financing. Because when the narrative shifts, policy follows. Watch the bond market. If yields start dropping on anticipation of cuts, metals can sniff that out early. And watch the tone around the Fed. If the conversation becomes, the Fed must be accountable, that can be code for, the Fed must comply. Now, here are two questions I want you to answer in the comments, because I want to see where your head is. First, do you think the Fed can stay independent in the next year, or do you think politics takes the wheel? Second, if rate cuts begin after May, do you expect gold to lead first, or silver to outperform once momentum hits? And again, if you've had any success stacking or investing, big or small, drop it below. Your experience helps the community more than you think. Now let me end with a simple thought. If your solution to too much debt is cheaper debt, then you're not solving anything. You're just stretching the timeline. And the longer you stretch it, the more you punish savers. That's why precious metals keep getting the last laugh. And that's why this Powell investigation, whether it ends in charges or ends in silence, matters. Because it's another signal that the system is willing to bend institutions to protect itself. And when the system bends like that, the value of things outside the system rises. If you found this useful, hit subscribe, hit like, and share it with someone who still thinks this is just politics. Because it's not just politics, it's money, and it's your money. Thanks for watching.